Okay, A and B are not on the exam. Question C. Golden Limited has a yearly balance date of the 30th of June, and on the 1st of July 2010 they purchased equipment with the following costs were incurred. This is how to value assets. So I think it's chapter 7 or 8, one of those two. How do we value assets? It tells me there's a cash price, we've got delivery costs, got installation, we've got fire insurance on our covering the equipment, fire insurance. The equipment is estimated to have a 5,000 residual value at the end of its expected useful life of 5 years. The company uses straight line depreciation method. Straight line depreciation method. On the 30th of June 2013, the equipment was scrapped with no residual value. Prepare all the relevant journal entries to record all the above transactions events relating to the equipment from the 1st of July 2010 to the 30th of June 2013. All right, so let's do that. Okay, so we're going to have a general journal. And I'm going to have my debits. I'm going to have my credits. Okay. So first things first, I want to work out what's the cost of my equipment. Who can quickly tell me what the cost of my equipment is? What do we include? What do we exclude? How do we value equipment? Cash price, so we're going to include that one. What else? Installation and testing. Any others? Insurance? No, I'm not going to agree on insurance.
Not insurance.
And my delivery costs.
I think somebody already said that.
So, did they?
No, not me, but I heard somebody say it.
What you need to include is costs to what you need to include is the costs to make the asset operational. Okay? Now, obviously we need it delivered and we need it installed and tested. We don't necessarily need it insured to make it operational. So this one is an expense. Okay? So now we need to record the cost of my equipment. So on the 1st of July, 1st of the 7th, 10, I'm going to have equipment. And how much is all that? That's 50, 53, 54,500. And what does it say? Ah, cash. So we purchased it for cash. Bank or cash, I'll accept. Now we don't need narrations in this one. Yeah, it's good. Now that's the 1st of the 10th. On the 30th of the 6th, 1-1, I need to calculate some depreciation. Now my cost of my equipment is 54,900. The equipment is estimated to have a 5,000 residual cost. At the end of the special life of 5 years. So all that is over 5 years. So my annual depreciation should be 9,900. Yeah? Yep, Natai? No, if it doesn't mention GST, I wouldn't include anything like that. Yeah? So you record the insurance, you're saying? Yeah, you could, but it says prepare all the relevant journal entries, record the above transactions events relating to the equipment. I guess you could say, yeah. If you put it in, it wouldn't be wrong. Put it that way. All right, so now I need to record my depreciation. So my depreciation expense is 9,900, and that's a debit, like all expenses. And my accumulated depreciation is 9,900. Now I'm doing the same thing for the 30th of the 6th, 12. Which is 9,900. And my accumulated depreciation. I'm forgetting how to write. When do we sell the equipment? Companies Australia. Oh, the equipment was scrapped, so I need to do my depreciation for the 30th of June 2013.
Oh yeah, yeah.
And that's my accumulated depreciation. And now what I need to do is I need to scrap my item. So I need to make a calculation. I need to reverse all these entries out of my accounts. And we're doing this also on the 30th of June 2013. Now, so if I've debited it once, I've debited my equipment, so now I'll need to credit it. I'll need to debit my accumulated depreciations, and then, pardon me, the difference should be the loss on the sale, because I've scrapped it, or loss on the asset. So let's have accumulated depreciation. So my disposal of my asset, my accumulated depreciation is this plus this plus this, which is 30,000 less 300 is 29,700. My equipment, because I'm disposing of it, I need to remove it from my accounts. I'm going to credit this balance out, 54,500. And then loss on disposal, what's the difference between that? 29 is 30, so 24,800. The loss on disposal is the difference, that's right, yep. So that then goes into my income statement as recorded as a reduction of profits. Is everyone okay to this point? Yep. Sorry, you have to say that. Why did we write it 3 times? Because it was 3 years. So I did say you could have done the depreciation in one recording, but just to step it out so you can see where the numbers are coming from, see my straight line depreciation calculation. Yeah. Yep. Yeah. Why does it go to the credit side? Which one? Because I'm trying to remove the equipment from my account, so I've debited it here. I'll need to remove my equipment, I have to credit it here, now I have no longer equipment in my accounts.